Welcome back, guys. Today I want to do a quick update on Fetch. I'm seeing a couple of key chart patterns and indicators, and it's going to affect my new price prediction a lot. So kind of want to update you guys on what I am seeing right now and where we might be headed in the future. So let's dive right in here and get into this daily candle chart of Fetch. We have the 200-day and 50-day moving averages up on the board. And the first thing I wanted to point out here is the fact that we do have a cup and handle forming. If you've watched my videos before, you know I am a fan of identifying these. I think this is a great, long-term chart pattern in terms of being able to understand where we're headed, whether we're headed for a bullish scenario or a bearish scenario in the long term. So we can see that it kind of consolidated itself from March all the way to present day. So we like that. That makes it a little bit stronger knowing that it consolidated for that long. So that helps us kind of understand where we might be headed and gives us a little bit of context of where we're at in terms of the chart. And then I want to move over, getting a little bit more granular here. I want to talk about a few key points, few key levels, and then price predictions here. So really quickly, I want you to notice right here, just 2 days ago, we broke under the 200-day moving average. This is the 4-hour candlestick chart, by the way. And so we broke under that 200-day moving average. And just to measure this out, to get an idea of whether this would be expected or not based on what we saw before, that's 19%, give or take. And if we look back the last time we broke this 200-day moving average, we fell, let's check it here, top of that candle here, just around 18%, so about the same amount of time. And so if we're going to compare apples to apples here, the last time we broke out from below the 200-day moving average, we went from roughly 21 cents all the way up to $1.18. So that's about, give or take about a 9x, 900% gain. So, that's definitely something to keep in mind as well as we go through this. So if we're actually able to, now kind of looking at where we're going to be headed, if we're able to break cleanly above this moving average and close a couple candles, our next key target is going to be this 81 cent level. And after we break 81, really we're trying to look towards above a buck up to $1.18. That's kind of going to be the next short to midterm target in terms of where we'd be headed if we do break this 200-day moving average cleanly with a few 4-hour candles, maybe even a full day. About the same time frame since we last broke the 200-day moving average. So back here we saw it took about, we saw it took about 2 days. And right here, it took about 2 days just as well. So things are matching up nicely right now. Obviously, there are no guarantees, but if we see a 9x from, our current levels here, right between 5.8 and 74 cents, we're looking at somewhere between this final fib level up here, which is at 4.6, and then, a clean 9 to 10x would put us, a clean 9x would put us around $5.22, right around that level. So really long term, I mean, through this end of this bull cycle, if we're going to mirror what we did prior, our new price target as opposed to what I was saying before, around $3, because, we couldn't really get as much out of the chart patterns before. But now that we've seen more progress out of the last couple of weeks, it's looking like we have a chance to, if we mirror that prior scenario here where we 9x'd, if we're able to mirror that and, bounce cleanly off of this 200-day moving average back up to the upside, and then we end up breaking not only the $1, but also the $1.18 key resistance level, then we're kind of off to the races searching for that new resistance and support. And even though we're bullish long-term on Fetch, obviously, it's always good to just kind of double check and prepare yourself for what could happen towards the downside. So let's just cover that really quickly. Let's look at a couple key levels to the downside. Not a surprise, this 60 cent level is massive. Obviously that's going to be the next big test if we do end up not being able to break 81 cents and we kind of come back here test this support again, that's definitely possible. 60 cents is the next level. The next key level, if for some reason we cannot hold 60 cents, 45 cents, 46 cents is going to be huge. And that is kind of what's going to ultimately save us if we end up dropping below that. If we want the bull run to really stay intact, we gotta find this as support, or at least play here and then break the support. So definitely some downside areas to watch. Although I do believe with everything happening right now with Fetch, I do believe $5, $5.50 is possible towards end of year. And especially with a lot of this, new roadmap news coming out, they're trying to expand their app base, and a lot of that's going to come out. At least their first app is releasing on Christmas. And so what they mean by apps is essentially these applications that help with all of these real world scenarios using their AI agents. So this is someone booking a parking space with no human involved, just scanning a QR code. The AI agent actually finds the open spaces, bills them, books the space, and he's ready to go with no human assistance. So just an example of what they're trying to put together, and that's kind of what they're looking to implement before the end of Q4 and before the end of the year. So really excited about Fetch. Obviously I'm hodling, I'm sure some of you guys are as well. But hope you guys got value out of the video. Would love if you dropped a like, and subscribe if you're into this kind of stuff. Really appreciate you watching to the end, and we'll see you in the next video.